Hey viewers, welcome back to the channel. I'm Harinan from Zumit Capital, and today we are talking about curated portfolios and how to choose the right one for you. So, what is a curated portfolio? A curated portfolio is a collection of investments that has been carefully studied and selected by experts for achieving certain goals. Now, these portfolios can be beneficial for individuals who does not have the time or expertise to research on these assets. A curated portfolio is kind of similar to that of a mutual fund, where an expert uses his knowledge to design a portfolio. But in case of a curated portfolio, even though the manager uses his knowledge to design the portfolio, the complete power rests in the hands of an investor. Like in case of rebalancing a portfolio, an investor can opt not to rebalance his portfolio. Also, in case a particular stock is being underperforming in his portfolio, he has the right to sell these specific stocks and keep on going with his stocks that are performing good. All these are possible because the curated portfolios are being run by tech companies that allow the portfolio to be converted into stocks into an investor's demat account. So compared to a mutual fund, the curated portfolios give a proper transparency and control over the portfolio for an investor. A thematic portfolio can be broadly categorized into four: thematic portfolios, strategy based portfolios, sector allocation portfolios, and asset allocation based portfolios. A thematic portfolio uses research to identify stocks that are relevant for a particular theme. Now, electric vehicle is one of the most popular theme that is running around right now, and experts who study these themes know that car manufacturers or chemical companies or battery manufacturers are the best suitable stocks for this theme. Strategy based portfolios. In a strategy based portfolio, a strategy is being used to select assets or stocks into a portfolio. These strategies can be unique depending upon the fund managers or can be common strategies used like canceling, magic formula, etc. Next is the sector based portfolios. Now, in a sector based portfolio, the assets or the stocks that are in the portfolio would be highly concentrated into a specific sector or an industry. So, diversification in these portfolios are pretty much low. So, some of the examples for the sector based portfolios would be IT tracker, pharma tracker, energy tracker, etc. Asset allocation based portfolios. In an asset allocation based portfolios, multiple assets are clubbed together to provide an investor with a risk balanced portfolio. For example, we all know that debt funds provide fixed returns and are pretty much low volatile, whereas in equity it provides the straight opposite results. So combining both of this can create a good risk balanced portfolio for specific investors. But with so many curated portfolios available, how can you choose one for yourself? Here are some factors to help you choose the right portfolio. Financial goals. So before choosing a portfolio, it is best that somebody has an investment objective to them. Like, do you want to maximize your investments, minimize your risk, or something in between? So while choosing one, it is crucial that somebody keeps this in his mind. The next would be the age factor. The age factor would be a crucial decision before investing because a person in his 20s would be able to take more risk compared to somebody who is at his 60s or 50s preparing for his retirement. So a person in his 20s would have like a much more risk tolerance or time for investing into the future, and a person who is ready to retire would have the goal to preserve his capital and minimize his risk. The next is the risk tolerance. Now, a risk tolerance is the amount of loss an individual is ready to lose before investing into any kind of investments. Now, this varies upon from individual to individual. The next would be expertise in sector. Now, individuals might have some expertise in a specific sector or an industry, depending upon their job or their business. So, in looking at investments that are related to these sectors, would give them an upper hand in their investment journey. Now, the next would be the income factor. Now, incomes are of two types: a fixed income like a salary, and a variable income like a business income. So considering these factors would be better to make an investment decision for an individual. Last is time horizon. In this, an investor should look how long he can stay invested into the market. It is said that The longer the time, the better the returns would be. So, in conclusion, a curated portfolio investment would be a best way for investing into diverse range of assets by an individual. So, with that, I conclude this video and thank you for your valuable time. Do check out our website and the curated portfolios we have been creating on small case, wealth desk, and model funds.